Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So our futures signal a flat open this morning after a pretty quiet night around the world. And now the question is, do you think we'll continue to trade within this range for the rest of August?
Well, we don't know how long it's going to take to navigate this range. But like you said, overseas, everything's pretty much status quo. We saw some good data out of Europe. A lot of people are starting to say that Europe is coming out of recession. There was some, data out of Germany and France to support that. Their indices are pretty much up or down small. Then you have the Nikkei, which, I'm just going to put up a chart of the EWJ, which actually happened to be up, about 1% or so. So this overall big pennant type pattern is still being navigated after a huge move to the May 22nd highs. And then you have the FXI, the China exchange, right? China was a sore spot, crash landing, every bear would say out there. And overall, here's a double bottom. Okay, then you had a gap up that held, cleared another level, and then cleared a downtrend that's been in place since the beginning of the year. So now maybe with a little work above 35.80-ish, that can continue. So overall, the summer has had it has a lot of opportunities, but the range that the S&P is in, people are starting to get a little bit, frustrated, or maybe they're over trading it.
We have seen a lot of bears come out this summer. Why do you think this is such a hated rally?
Well, just if you haven't been involved in the rally, you hate it. If you've been shorting it, you're in pain. So now with the S&P consolidating, everyone's trying to say now, or trying to be right because they've been wrong all year. Oh, the market's going to crash, 20%. Oh, Faber says what? This is going to be like the 1987 crash, or even some other names out there that's calling on top for the third time this year. But overall, you cannot be super bearish on this market until maybe we break 1684. So if you look at this range you were just talking about, Britt, here it is. Okay, this is the upper range that we've been navigating for almost 2 months now, okay, after a really nice spirited move from the June lows. Here's the trend we've been in since November, the very gradual trend. Here is that accelerated trend that as traders we were trying to navigate, and then finally, this was your corrective time period. And it was only about 6%. So if you didn't buy here and missed it, you're still chasing. So if you want to take a look at this range, the upper area, which we have been navigating, this is all you really need to know without opinions. You could have an opinion, but wait for the market to confirm it. Until, we break and close below 1684, and that's an if. It's still an if. I would not be super bearish, and if that happens, then we'll have to see how we handle the 50-day. But if we continue to hold this well-defined floor, and then all of a sudden we start getting a lift in some key sectors and break back above 1700, I don't know if you're going to want to be a bear rolling up the shorts the way they've been rolling them up for the majority of 2013.
Well, speaking of one of those sectors, for the bulls to really get back on track, one of those sectors that we need to wake up is the banks. And we did see them perk up a bit yesterday, so perhaps signaling this could be the start of a bigger move, would you say?
Well, they showed their face. They perked up a little bit, but really they've been consolidating. And a lot of people pointing at that it's bearish that they're consolidating, but meanwhile, they've had multiple moves for 2013. But in order to break above this range, we're going to need the help of the banks. Okay, so if you look at the XLF first, you will see that yesterday, it did hold support. You had a little bit of a reversal where it broke below the prior day low, then broke above that high. So that put it back on the map. It reclaimed one of the moving averages, but really it's going to have to start getting above this area in order to, show its face, so to speak. If you look at the move that the XLF has had, it's been unbelievable. And this is just one of those corrective time periods. If we were to break and close below, it would have helped the bearish case. But for right now, we have a new point of reference on the XLF, and that's 2024.
Well, let's keep the spotlight on some of these names and talk Goldman Sachs, which held its 50-day, was able to reclaim its 21-day yesterday. Do you think we'll see some continuation there today?
Well, it's a start. It's a start like many of them. What I call it sometimes is day one. In order to get excited, you need a confirmation on day two. So I do think some traders probably took a feeler in some of the banks yesterday, and then today, if they happen to trade above yesterday's highs, maybe that's your add, part of the 3-day rule. You look here at Goldman Sachs and you will see here is support that it held, okay, and you had a little bit of a green day, okay, after a channel type formation here. You want to take a closer look here, and you will see yesterday was a start. In order to get a little excited, it's going to have to trade above 164.55. to make its way back into the upper end of the range. I do think that Goldman Sachs has had the leadership role many different times throughout the course of the year. The best time for that was way back here, if you do remember. And since then, it's just trending, and this trend has been strong. And if you're a macro investor in the banks, you've really had nothing to worry about. As an intermediate trader, look for opportunities.
Well, like Goldman, Morgan Stanley was also able to hold above its 50-day and had gains of about 1.2% that helped it reclaim its 21-day as well.
I feel like I'm going to be a little bit of a broken record during the sector, but
redundant.
But again, everyone picks and chooses different banks, so we'll
Right.
go over different levels of all of them. And if you look at you look at Morgan here, it does look okay. I don't love the fact that you see this gap here. Remember this gap? It filled it pretty quickly. Showing not a lot of power, but here you are holding the 50-day. This one actually went above the prior day high. It's back in the moving averages. Here's your upper channel. So same thing here. If you bought a little bit yesterday, see if it could trade above yesterday's high, and that is 27.09 right there.
And Citi registered about 1.7% of gains and was actually able to regain the support of its 8-day.
Yes, and same thing here. Let's look at the pattern. Patterns in all of these look pretty much the same, controlled pullback. If I were you, I wouldn't, be long 5 banks. I would take 2 of them. Pick 2 of the best ones that the speed and the composure of. This one yesterday, had a potent day, almost engulfed a few, so it showed a little bit of power. So now I would say it's got to get above 52 and stay above 52 for any more excitement to happen. And then you have a really nice defined resistance level, which I'm pretty sure at some point this year will take out. So that stands right there at 53.
How about Wells Fargo? It's been holding uptrend support since April. What do you think are the levels to watch there?
This one I don't think a lot of people like to trade. People want to own them. This is one of Buffett's favorite banks, and he comes out on it all the time. It doesn't really trade the way traders like banks to trade, but anyway, I won't get into that. You look at Wells Fargo, it too has been trending. Nothing really different to say here, except for it does have a gap down right there that if it wants to fill that gap, that could happen pretty quickly, and if that's the case, it's got to get above 43.57.
And Bank of America.
And this one, I just re-entered yesterday. I'm still, I wasn't sure what type of pullback we would get here because it's been pretty lethargic, but overall, you look at this pattern, it's been unbelievable. Ever since it broke above $10, I remember that. I wish, I could have that kind of setup back again, but, setups change. You also had a nice continuation setup right here after a really nice consolidation. Then another one here, and now look where it is at this upper level. So you take a look here at this upper level, and you will see yesterday it did perk up. And now in order, for it to get a little bit more exciting, it's going to have to get above and stay above this 1460, and then you have the highs of the year.
All right. Well, coming up, we're going to go in the trenches with casino stocks, where there could also be some opportunity. But for this quick commercial break, we'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with casino stocks, where we're seeing some consolidation. So could there be some action here in some of these names? Let's talk Wynn first, which actually poked out of the tight range that it's been in yesterday. So on your radar today?
I feel like this year the casinos have been somewhat off the radar. And I think last year we were all over them. They were moving, they were trending, and sometimes they just consolidate. And this has been one of them that has not really been I don't think I've really traded this more than a few times this year, but there is a setup happening with China, perceptually bottoming, which they might be. Macau might get some play, and then the psychology of this group could lift. So if you look at the chart of Wynn, you will see that, overall on the daily chart, you'll see somewhat of a cup and handle pattern. Sometimes they take a little bit longer to pan out, but overall, look where the moving averages are. They're below this flag. You had a spirited move, flag type pattern. So if this were to trade above 140.50 or maybe 141, it could continue back to this point of reference. But something that's a little bit even more exciting is you go to the weekly chart, you'll see that there's a really big resistance level there that it hasn't been able to clear, and it's really been in almost a channel. So if you want to take a look at this overall channel for what's been almost 2 years, this could be a considerable spot to get above. I don't know if it's going to have the power over the summer to do it, but keep wind on your radar. It's acting a bit better.
All right. How about Las Vegas Sands basing above its 21-day? Could it be getting ready for a breakout?
This one too looks pretty decent. Again, it hasn't been trading like the Las Vegas Sands of the past, but it's in play. And if you look here, you will see that it too, has been trending higher since this low here. You could draw this little line. It's above the moving averages. You have a little bit of a tight range here. So I would say above 57.09-ish. Perhaps it can go. This is your real pivot. And then you have the May highs. Let's take a look at the weekly chart to see what that looks like. On a weekly chart, it's interesting because remember when we really loved it? I love when things channel. That was right here when you had a really nice tight channel and it broke out. Then since then, it's been pretty erratic. So if you want to go, let's go monthly to take a look at it, to see where it is. On the monthly chart, it's at a pretty key level or getting close to it where, if this economic recovery continues, you now have another longer term channel. So I would say if this were to stay like this through the fourth quarter, this would probably go on my 2014 thesis that a trade above 60.50 would produce a move to 80. So overall, this is trending, still looks good. Short term, let's see if it could get above this area. But longer term, I think there's a pattern there as well.
MGM holding above its 8 and 21-day since June 26th.
I like the way it's acting. I like that it got a lot of attention when some of the other situations that had more let's say exposure to Macau and China. This one kept going and made new highs. I do think that this pattern here looks really good. On a short term look at the flag, you'll see nice and tight, okay, above this area, above 1767. It could go again. I might even be a buyer there. You go to the monthly chart though, and the monthly chart's really interesting because look where this stock was and look at this long-term channel. So some are like, Red Dog, you've been talking about this since $8. How could you continue to like it? Because if you look longer term, this has been since 2009. Look at the size of this channel. So with that said, I think 2014, you're going to see 22. And if it gets really exciting, you might even see up to 28. So keep this one in the drawer. I've talked about that many times on Twitter, and I will say it again today.
And we had a nice 3-day move out of Caesars. Does this one just need a breather?
This one has been unbelievable. This is like a very thin high beta, casino, and it was a new issue that came public. You look at new issues, and we get very excited about them for a reason. It hasn't been alive that long. There's actually been talk about bankruptcy, this and that, and this thing. I don't, whatever. All I know is that you look at this thing, and it woke up right here with a nice wide range bar. Then it started to consolidate, and now it's been clearing 16, and here it is at the highs. It hasn't been public for that long, but overall looks really good. This is, what was that? That was the monthly, so let's go back to the weekly. Let's see if there was a cup and handle pattern in here, because I like to point those out. I guess you could say a small one, okay? Lots of these cup and handles have been showing their face in some of these recent IPOs. You could say this is sort of a cup, and then here is your handle. Where is the spout? Anyway, with that said, here it goes, cup and handle, boom, from 6 to 18. What is that? 12, that gets you almost 30 for next year. But anyway, with that said, on the daily chart, it's looking pretty good here. It broke above this, and maybe it needs a little bit more space. But overall, this has been something that if you watch the price action and stay with the trend, you've been rewarded.
All right, let's do some quick hits here and talk Apple. The big news of the day yesterday, of course, was Carl Icahn disclosing a large stake in Apple. The stock saw a huge move. Can it continue?
I thought the big news of the day was in the morning when we said it's been acting better, holding up since earnings, that I don't care that Larry Ellison's coming out and going to say that the company is going to fail. I think I called him irresponsible. I kind of thought that was the big news, but I guess not. The bigger news was Icahn coming out saying he bought it all, so I guess he must have been reading my Twitter feed. But anyway, with that said, you look at this lower range and it's been rounding up. Here's after earnings that gap up with commitment. We talked about buying it in here, which was that 3-day move, and here's one of your pivots. And then, I actually got out of it there, okay, or into there, and then bought back on that invitation news. And then we talked about if we reclaim the 100-day, that's a good sign, get long. So if you bought it because, not because you knew Carl was coming out with news, because I had no idea. Nobody knew. If you did know, you might be in trouble for knowing. But anyway, once it crossed the 200-day, and if you bought it in that afternoon, you had a nice welcome, what's a welcome mat or just whatever. You were rewarded, and it filled the gap. It got to the target. I was talking 500. If you want to sell some, sell some. But ultimately with him involved, maybe it'll help keep a bid in it, and it'll keep it very tradable, which is something that traders would love to see going into the fall into that invitation.
Yep, exactly. How about Tesla, which has lost some momentum after filling its earnings gap to the downside? Where could you imagine some buyers stepping in here?
This one changed a little bit, right? It gapped up after earnings, after a monster run and filled the gap. So the trade and the direct, not even the direction, just the speed changes. So if you look here at Tesla, you will see that, this was the last time it looked like it was going to change, when you had this outside day and boom, what did it do? It reclaimed the 21-day with the red dog reversal and then continued to the upside. So now you want to take a closer look here. This was the inside range that wound up breaking to the downside, whether it was the Barron's article or the downgrade by Lazard. Who knows? Held the 8-day for now. It's in this inside range. See if it continues to stay in there. If it were to break below, 142, some might try and short it. But then I do think, dip buyers should be coming in here somewhere around the 21-day. So if it were to get to this area, I'd be looking at it very closely for some type of reversal buy setup. But for right now, it's on the B list for now. I think I haven't traded it for 2 days because there's been other better setups out there.
So what list is Yelp on? It continues to hold above its earnings gap, showing some commitment there.
This one's on the B+ list. This
Okay.
one has the earnings gap. It still has the pent-up demand there. It's turned green. You look at the chart here. I know that there hasn't been much follow-through, but overall, here's your gap up after earnings. Had some follow-through, pulled back. Nice tight range here. So if this were to start getting above 52-ish with volume and hold above it, maybe it continues. So I think this is worth being on your radar in August.
And lastly, the OIH is approaching resistance. It perked up a bit yesterday. Will it have enough to get through it?
Well, oil had a decent move in the past month, so some of these names got some attention. So the OIH, as we look for money rotation, and money has rotated into some of these type names. You look at it yesterday, it was the first group to go green. Follow through is kind of tough to get in this group, but we shall see. Here is when it triggered above this mini range. I'd like to see this get above 46 in order to get a little bit more slick.
All right, well, we'll have earnings
Get that
from,
one,
I got
How's
it,
it going,
another
huh?
metaphor for us for our Wednesday. But we have earnings today from names like Deere, Macy's, Cisco. We'll have producer price index. What will you be focusing on as the trading session begins?
I'm just going to continue to watch this range. It seems like the floor is set. We have a micro ceiling and then the year-to-date highs. So I think, again, in order to start breaking above, the banks are going to have to get involved. The home builders might have to get a little bit stronger. But ultimately, if we stay in this range, it doesn't matter. We've had enough action within individual names that we've been trying to point out in off the charts, in the price point sheet, for you guys to follow. And if you want to see us do it live, make sure to become a virtual trade floor member. You could see when stocks come on, when stocks leave, how long we've been holding them. You could connect all the dots with all of our products on the virtual trade floor. So if you don't use that as a tool in your professional trader, I don't think you're maximizing your resources.
And there you have it. Happy trading, everyone. Have a great day.